Welcome to Invest. We talk about investing, finance, and professional development. As the current time of 10:34 a.m. on Eastern Time on August 21st on Sunday, Ethereum $100,610, up about 2.25% so far. Respect over crypto market, I would say across this whole morning so far on the East Coast, obviously, is quite kind of consolidated on sideways fashion, not really up or down specifically, but obviously Ethereum, Bitcoin are both up. So dragging across the market up about 1.5% so far. And on the media front and also on the futures front, just look at the futures first. Seems like across the equity market, we should foresee more of a flat day tomorrow morning. But across the spectrum, Dow Jones is down 0.9%. S&P is up or down, not really doing much right now. NASDAQ and Russell are pointing down, while being anti-correlated by the VIX, which is the volatility index, currently up about 5.32%. In a future perspective again, right? So we are indicating more of a mixed bag type of day tomorrow, but leaning more towards, for some reason, a red day. So it's a flat day, but a red day tomorrow, which can be changed as we hear more international news later today. And what are some of the catalysts that we need to look out for, right? For the remaining of the, coming week, not coming week, like Sunday is technically the beginning of the week. So this week, so the Jackson Hole speech will be debuting on this coming Friday on the 26th, which lays on the same days of the holiday of U.S. The Women's Equity Day and also the National Dogs Day. So seems like it will be 3 days, three events that will correlate on the same day, and along with the Jackson Hole speech hosted by Jerome Powell. And where we're going to be talking about this will be around, obviously, the economical pressure on the inflationary front, and also with respect to the upcoming FOMC meeting for Shadow that will be getting a little bit more, guidance from him. So we see how that goes, right? And overall, the technical front was something that we've been studying so far is that we've been quite elongated, right, for quite some time, right? We have been dragging up from basically as we were consolidating, if you were want to count it all the way from June 18th all the way till August 14th. So technically about like a little bit less than 2 months. And we gave up because of the extension that we've been having so far with the consecutive green pressure ever since the beginning of the July 12th all the way till the 14th, and I could count the chronological order, right? Positive job numbers, positive, well, again, relatively speaking, right? Positive CPI and the PPI report, and some selective corporate earnings that revives their guidance to be upward, right? So across the spectrum, it has percolated up to reach to the $2,000 mark, which is a relatively sizable monumental level. But as you get negative signal, right, and negative foreshadow, which the market has been quite vulnerable. We are in a bear market, so rallying the way that we have been so far, seems relatively sharp correction, which we saw the last 2 days, is very logical, right? And something that we've been indicating. So right now you could see that clearly on the technical front, we're reaching to the next level of support, which is 40 out of 70. So matching with the 1650, which is a level we talked about. But if we break down further, right, let's say we get negative signal this coming days, and obviously all the way to a Friday, or we get negative anti-support pressure, the next level down will be somewhere around like 1450, which is quite weak in comparison. But if we break that, we will be obviously matching with this level of the 35 out of 70. So we'll technically have 10 levels down on the RSI front. And then, if we break that and we get weaker pressure as we get closer on the 26, we will ideally going down to the 1250, right? So something to think about, right? But good thing is that we have crossed down for quite some time now. You could see that, this whole red candle is being matched with the MACD front. So we form a death cross, so we cross down to, basically confirm this negative pressure. So now it's basically our gauge. Do we go down to 34 or do we have worse pressure to the 20 on the RSI scale? So something to think about. But in terms of, is it right time to dollar cost average? I would say so. I do like the level that we're at right now, in comparisons to obviously days ago when we were quite extended, right? And just look at on the weekly, you could see that we have formed a golden cross. So that triangulate, but it's too late now because we have already confirmed that when we're reaching 2000. So what we need to see is kind of more of a cross down. So on a weekly, it looks quite bearish because we do need to kind of come down to the 30. So I think the like of actually reaching lower than 1650 is more likely. And on the monthly, obviously, it's still quite bullish. It means that months out, ideally in Q3, Q4, we should see some bullish pressure from here. And for Bitcoin is bullish on a monthly. Let's take a look on a weekly. Weekly is quite mixed bag, but I would say, in terms of the plateau, I think we are pretty much there because like 21,500 specifically is a very monumental level. If we break it, we head down to like obviously 18,500. But in terms of like, is it likely? I would say not really. To break 20,000 again, I think the current level is quite sustainable. So Bitcoin is a little bit more stable, and you can see that with respect to Bitcoin bouncing from 31 out of 70, which is matching with the previous levels again, right? And this is the reason why is because we've been forming an upward wedge. So eventually you need to kind of crack down, right? So this the technical confirmed the signal. So now we're meeting with the previous level, but do we see lower level to like let's say 18,500? I think it's unlikely. So I think Bitcoin is not a terrible setup to be DCA at the current level right now. And across all the other altcoin, I would say it's quite similar. In terms of the technical, again, right, daily is we have had that sold off, sell off because of the extension. So but we still need to watch with respect to the Jackson Hole speech that's coming in the next 5 days, and then is the replenishment of the quarterly shift, right? And then we have to see the CPI report again, the PPI report again, the FOMC meeting, all of those catalysts. So it doesn't seem like we can get much of a break, but the technical, it is confirming and is aligned with what we're expecting. So let's just stay in touch and continue to be aligned with the expectation going forward. Okay, so appreciate you. Have a good rest of the day, and I'll check you out next one. Take care.